Howdy, folks. Welcome back to the Stockcharts TV studio here in a sunny but smoky, because we're dealing with some wildfires in the Seattle area, Redmond, Washington. My name is Grayson Roze. I am the Chief Strategist here at Stockcharts.com. As always, delighted to be back with you in the studio to talk about some charts, talk about what's going on out there in the market. So much action to dig through. This is the show we love to do at the start of every month, digging into top 10 charts to watch, things that have caught my eye, things that I am keeping a close eye on for the month that is coming up. So we're kicking off August with a bang here, top 10 charts to watch. Now we're going to do this one a little bit differently. As you might notice, we've got 10 charts to watch from 10 different sectors. We've left out one of the weakest sectors. That's going to be energy. I'll give you a little bit of a sneak preview there. We got no energy stocks in the show today. But the rest of our picks are actually going to come from different sectors. So we basically got one pick per sector other than XLE. So we're going to have some fun digging into all of those charts, things that have caught my eye. We're going to talk through the setups, talk about exactly why I've got them on my list to watch for the month of August. Now, before we do that, we typically like to kick things off by talking about market conditions, right? We like to touch on exactly what's happening in the markets, give ourselves kind of a backdrop for the environment that we are picking these charts in. I gotta say though, I don't have a ton to say about this market. It's an interesting time out there in the markets. We have had an absolutely crazy year. A couple of weeks ago, we did our kind of mid-year special. Dave Keller and I had a chance to sit down and discuss all the madness that we've seen this year. But where we stand right now, I gotta be honest, I don't have a lot to say. It's pretty clear and simple, pretty cut and dry for me. The market has had this insane sell-off, has had an insane rally back, but we're sitting up not too far off of all-time highs. We're about 2.5% above the 6145 breakout level on the S&P 500. That was a clear level to watch. But now we're just kind of chugging along. We've finally made our close below the 20-day moving average. We had an insane nearly 70 sessions in a row closing above the 20-day exponential moving average on the S&P 500. So we've had this bull market that has absolutely just cruised to the upside. To me, this is kind of a clear and simple market. We need a sell-off here in August and September. Also plays into some historical seasonal weakness that we typically see in those months. So when I think about what's going on in the markets right now, we've had this amazing run higher after a crazy, crazy sell-off, but we really need some time to kind of digest these gains, digest this move higher. I still think this bull market has a lot of room to run, so I want to show you a couple of things that I'm watching closely this month on the market summary dashboard. But to me, this is a pretty simple kind of time to watch the S&P 500 if that's kind of your index of choice. You've got a clear breakout level there. That's like we mentioned, 6145. That's something that I'm watching very, very closely. But I'm kind of going to cheer if we can actually come back down to that level. Again, we're about 2.5% above it right now. If we can see the S&P 500 come back to that level, test that breakout, find some support, and make its way higher, I think that's playing into, like we said, that seasonal pattern. I think that's what we're going to see. So I don't have a lot to say other than that. I mean, it's definitely an interesting time to be watching the markets. But let's jump over to the market summary page. I do want to highlight a couple of things that I'm definitely keeping a close eye on for this month, and then we'll jump into those top 10 charts to watch. So here on our market summary dashboard, one of my favorite resources around the site, we've actually rolled out some new navigation for the entire Stockcharts platform. So all of these different tabs that you have at the very top of the website, you now have a new market analysis tab. Allows you to get to this market summary dashboard very, very easily. This is the place to watch the markets. This page has really everything that you need to see, everything that you need to be following on a daily and weekly and monthly basis. Couple of things, though, that I want to draw your attention to, things that I'm keeping a close eye on for this month. First and foremost, as we scroll down this page a little bit, the Keller trend models, the Keller market models, all pointing up at the moment, all in that bullish positioning, something that Dave Keller touches on quite a lot, but I am definitely keeping a close eye on these short-term market models. So if we do see these start to flip, I think that's going to be a sign of some short-term weakness that we're going to want to definitely follow. But the Keller market model is definitely something that I'm following on this page in the weeks ahead. Scrolling down the breadth boards, definitely keeping a close eye on that. Now, we've seen breadth absolutely recover from the sell-off that we saw earlier this year, But now, when we look at this, breadth is kind of a mixed bag. We've got some numbers here, above the 20-day moving average, percentage of stocks above the 20-day moving average. Those have definitely cooled off. We're starting to see some red across the breadth boards. It's a mix of yellow, green, and red, though. So when I look at this, this tells me just even visually, the breadth boards are saying that breadth is kind of a mixed bag. So I'm keeping a close eye on that. I definitely want to see us maintain higher percentages of stocks above the 50, the 100, and the 200-day moving averages, some of those longer-term trends. But to see the percentage of stocks above the 20-day start to cool off a little bit, not too concerning, but definitely keep a close eye on these breadth boards. And remember that for any of these, you can actually click the index to get a chart of those over time. Keeping a close eye on the breadth boards as we scroll down here to the sentiment panel as well. I'm keeping a close eye on the VIX, keeping a close eye on volatility. This is a great way to see it, a very, very helpful chart where we've identified some of those crucial levels for you. Right now, VIX still below 20, not really too concerning at all, but has been ticking up just a little bit. We've seen a couple of moves above that 20 level. That's kind of the intermediate term caution point. So keep a close eye on this volatility chart. This is a really, really helpful one that we've built into this page. Definitely something that I am watching very closely. But at this point, the VIX not screaming too much concern. I'm also keeping a close eye on our positioning and exposure chart. So one that takes a little bit more time to study, but basically tells you how traders and professional money managers are positioning themselves out there in the markets. So the put-call ratio at the top, and then some of the professional money manager indexes down at the bottom. If you see this put-call ratio ticking higher, if you see this get above the red line, that signals that traders are putting on lots and lots of puts, favoring puts over calls. Traders are more short than long, basically. So if you see this start to tick up as it is, this is definitely something to watch. If we're down here below that green line, that tells you that traders are kind of a little bit more complacent about the market, just kind of buying calls and letting it ride. Now, North American asset managers, that's what this index is, the NAAIM Exposure Index. So we are seeing professional money managers taking a little bit off the table here, cruising a little bit lower on that exposure index. I want to see this kind of hold, definitely above 50, but keeping a close eye on this chart. Again, just kind of tells you where money is flowing between traders and between professional money managers as well. So that's another one that I'm keeping a close eye on. Also watching these key ratios. So in this key ratios panel, we've got a couple of different tabs. The one I'm keeping a close eye on most importantly is our offense versus defense ratios. We want to understand sort of what's the character of this market. Even if we do sell off, we want to understand are investors favoring more bullish offensive corners of the market or more bearish defensive corners of the market. So I'm keeping a close eye on this. This is one of those things where I love to reference this time frame menu up in the top left corner. Kind of floats with you as you use this page as well. So keep a close eye over the last 1 month on how these ratios are looking. If these ratios are positive over whatever time frame you select, that signals that the market is favoring more offensive corners. When you see these ratios start to turn red, that signals that the market is favoring more defensive corners of the market. So for instance, in this case, we can see that hotels, kind of a more offensive corner, are actually underperforming utilities, a much more traditionally defensive corner of the market. Interesting thing, that's actually starting to flip a little bit now with all the AI craze, but still definitely holds true overall. So keep a close eye on these offense versus defense ratios to understand, again, kind of what's going on beneath the surface of that market. What's the character of that market? One thing I also want to turn your attention to before we jump over to our top 10 charts, hit this charts menu and look for the ultimate S&P 500 chart. I'm finding that this is a fantastic way to follow the markets, puts a lot of these things on there for you. So that chart looks like this. Gives you a classic chart of the S&P 500 up top with a couple of key moving averages, the 20, the 50, and the 200-day. As you can see, that huge stretch of up days, of days trading above the 20-day moving average. We've finally broken that, but we're actually above it now for today's close. So we've actually recovered that 20-day moving average. This is a huge run of up days, though, and just definitely something where we see the market a little bit too extended. We want this market to cool off, even if we are bullish, even if we want this thing to move higher. We want it to do so after kind of resetting a little bit. That's how I'm feeling about this market. We can see that 2.5% roughly move above that kind of key breakout level. That's about 61.45. That's what I'm watching on the S&P 500. But we can see that we're trading above the 20-day now. We're trading above the 50-day moving average. We're trading above the 200-day moving average. And all three of those are also rising. We can see all of those moving averages moving higher. The great thing about this ultimate S&P 500 chart, though, some of those key ratios, some of the breadth numbers, different things that we were just touching on, it's all kind of built into this chart down below. So you can see the percentage of stocks in the S&P 500 above their 200-day moving average. We can see that kind of classic breadth measurement. Has been moving higher. We're cooling off a little bit now. I want to see us definitely hold above 50% on that. But nice and easy to watch that ratio right on this chart. Consumer discretionary versus consumer staples. So one of the classic offense versus defense ratios. We can see that right on this chart as well, that red line. We want to see that moving higher if we are feeling bullish about the market. Growth versus value. Again, we want to see that moving higher if we are feeling bullish about where the market is heading. We don't want to see value stocks leading if we want things to be more in the sort of offensive camp. You've got high beta and low volatility on here, momentum, so many different ratios on here that help you follow exactly what's happening in the markets, even down to mid caps versus large caps, small caps versus large caps, equal weighted, kind of a breadth measurement, equal weighted S&P versus the large caps, or the traditional cap weighted index. And then we've even got the stocks versus bonds down here at the bottom. This chart kind of all in one place, being able to scroll down here gives you a great sense of what's happening in the markets. It's a really, really nice chart to reference, especially on a weekly basis, but you've got access to that right from that market summary dashboard. So keep a close eye on this chart. I think it's an incredibly helpful one, a very, very powerful resource that we've built in. And again, a lot of these things that I'm saying I'm watching for the month ahead, they're kind of all on that chart, so it makes it easy to follow it all in one place. Now, speaking of following it all, we've got our 10 charts to watch for the month of August. So I say we jump over to the Sharp Charts workbench here, and we're going to kick things off with our first stock. We are starting in a really interesting corner of the markets. I'm always fascinated when this happens. We're starting with a consumer staples name. Again, remember that we said our picks this month are actually all going to come from different sectors. We've got 10 sectors represented. I spilled the beans a little bit and said energy is our only sector that is actually not represented in this list, which makes sense because it's one of the weakest sectors out there in the markets right now, has been for quite a while. But we're starting in a really interesting corner of the markets. This is where staples gets kind of offensive. Staples, obviously a more defensive corner of the markets, but occasionally you see these names in there that are moving like high growth offensive stocks. One of those that stands out to me is Sprouts Farmers Market, SFM. That's going to be our first pick. Now, this is a little bit different than the setups that I typically gravitate to, but this has been a stock that I've followed for a long, long time because the long-term trend on this thing has been an absolute thing of beauty. So what I find really, really interesting about SFM right now, clear consolidation range. We can see this sideways move. Not a lot to love on this chart in the short term. I'm going to be honest with you. I'm going to call out a couple things that I actually don't like on this chart right now. Declining relative strength. We're not seeing SFM outperforming the market. That is definitely a point of weakness. We're seeing a test of the 200-day. We're technically sitting below that 200-day, but we're really kind of chopping around that 200-day in the last few sessions. So definitely moving lower, testing that 200-day moving average, but actually breaking below it a little bit today. Momentum, very, very weak. We're seeing the RSI in the 30s, the low 30s actually. So no momentum, no bullish momentum here for SFM. And the scooter score, that's our Stockcharts technical rank down at the bottom. Ugly, 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 down in the 20s. So to be honest, not a lot to love in the very, very short term here on SFM. But this is charts to watch for the month. And the reality is, this is in a consolidation range and has a good chance of bouncing. That's why this caught my eye. Now, if we flip over really quickly to the long-term trends for SFM, we're going to use our template tabs over here, our chart style buttons. You can save different collections of settings to your little style buttons over there on the left side of the screen. Makes it very, very easy to flip back and forth between different time frames, different collections of indicators, different things like that. One of my favorite features here on the Sharp Charts workbench. So I've got here with this W2 chart style, I've got a 5-year weekly chart. So now we're looking at a much longer term chart for SFM. And what we can see here is that this stock has been an absolute flyer, has heavily outperformed the market over the last few years. That's why I say this is kind of a growthy corner of staples. It's a really kind of funny intersection of growth and defensive, offensive and defensive, sort of a funny mix there. But we can see how big of an outperformer Sprouts Farmers Market has been over the last 5 years. And we can actually flip back and forth between some longer term time frames. So this is 7.5 years. Let's look at a 15-year chart. We can see this really kind of came out of a large IPO base and has moved higher in the last couple of years. It's been an absolute flyer of a stock. So especially over the last 5 years, when I look at this name, this is a company that has absolutely been favored by investors. The market has sent this thing rocketing higher. And so that puts a little bit more perspective on that consolidation range that we find ourselves in. Realistically, this is a consolidation range within a beautiful long-term uptrend that has a lot of relative strength going for it. It's got a lot of bullish momentum going for it. It's got a really strong sort of scooter history going for it if you average that thing out over time. So a lot of those things that I just called out as weak points in the very short term for SFM, they're actually kind of have been strengths historically for this name. So this consolidation range within that uptrend is what catches my eye. And specifically, when I think about a long-term winner that's now testing its 200-day moving average, its rising 200-day moving average, within that consolidation range that's really well-defined, well, this becomes a name that I definitely want to follow. This is definitely an interesting name, especially to watch for the month of August. So a couple different ways you could play this. Obviously, you could wait for it to come down and kind of test the bottom of that range. Maybe that happens. You could play the middle of the range, which is kind of where I've drawn that green line. I think there's some interesting support and resistance, sort of supply and demand dynamics to play with there on SFM. Or if you're being a little bit more conservative, you're being a little bit more patient with this, maybe it's one for the watch list. You want to see this get back up to those all-time highs, and you want to play a more of a traditional breakout. So if this does recover some of those key moving averages, some of those previous price levels, this is definitely one that could be on breakout watch for later in the month or beyond. But definitely an interesting name to follow, especially right now with how it's testing that long-term average, that 200-day moving average there within a broader uptrend. So our first stop on our tour today of 10 charts to watch is going to be a staples name, SFM. Moving on to number 2. Now, one interesting thing I should note also, we're actually going kind of in reverse order of scooter score here. So I mentioned that one of the weak points there on SFM was that the scooter score was so low. What I've done is taken my 10 picks and actually sorted them in reverse order by scooter. So you'll see the scooter score is actually going to get better on each of these charts as we go. Little interesting note, sort of how I organized this list, why I put one in front of the other. So using the Stockcharts technical rank there, another interesting way to use it. Number 2 is going to be out of the healthcare sector. Now, healthcare is another really fascinating corner of the markets because traditionally it's considered much more defensive, but it does have corners that have that kind of offensive flavor, especially biotech. One of the key ratios that you'll find on that market summary dashboard is biotech versus healthcare. That's a ratio that I've followed for a long time because what you're looking at is basically within this sector, this defensive sector of healthcare, there's this offensive corner of biotech. And if that offensive corner of biotech is leading that defensive sector, that tells you something about kind of the character of the market and where investors are funneling capital. So I like to follow that ratio. I also like to follow kind of different corners of that sector to think about kind of what's happening within healthcare. It's a very fascinating sector when you kind of really dig into it. One of the interesting names that have caught my eye from healthcare for this month is BSX. This is a medical equipment name. I love the pattern on this. I love buying breakouts. That's typically the setup that I like to follow. If you guys have been following these videos for a while, you know that I love to say, you got to draw more horizontal lines on your chart, set those supply and demand levels, set those support and resistance levels, draw those horizontal lines. Gives you a really easy tool to manage risk against. There's so many reasons why I think breakouts are such a crucial way to follow the markets. For a name like BSX, I'm definitely following the breakout here. You can kind of see that green line that I've drawn that. I want to see this thing reclaim those new highs. I want to see this thing break out, make that move higher, and start to catch a bid from market participants. But what I love about this name is the ascending triangle that we're seeing on this chart. Very clear ascending triangle to me. Again, kind of within this consolidation range. So I'm watching that breakout, but I'm also watching this trend line that you can see I've drawn, and we just keep getting pinchier and pinchier and pinchier. Now we're kind of pushing up right against that breakout level. I think this thing is absolutely ready to pop. Not a lot of relative strength on this name, but that does make sense for a market that's been moving higher and a name that's been consolidating. What I like to see is that we're not breaking down necessarily on that relative strength line. We're just kind of drifting sideways. So lots to like here. I like that we're trading above key moving averages. Also, the 20 is above the 50 is above the 100 is above the 200. They're all moving higher. Lots to love about the sort of moving average mix that we have on this chart. I like to see the RSI also not dipping below 50. So bullish momentum range here on the RSI for BSX. That's definitely something that I like to follow. Now, the scooter score is definitely a bit of a weak point. Again, this kind of makes sense when you have a name that's consolidating within a strong market, but I do want to see this thing continue to move higher. Again, this is one that I would definitely have on the watch list, one that needs a little bit more time to get back above that green line, I would say, but starts to become really interesting if we can see this thing make that breakout. Now, the flip side is it could absolutely lose this uptrend. It could lose some of these key moving averages and just fall back into that consolidation range. And then the pattern starts to change. The way that you look at it starts to change. So definitely one to watch very closely, but BSX, I love the ascending triangle on this. Definitely one that has caught my eye within the healthcare sector for the month of August. Next up, we're jumping over to industrials, Cintas, CTAS. A classic kind of breakout pattern. We're watching, we're waiting, we're trying to see this thing make that move higher. But again, we can draw our horizontal lines, we can draw our levels to watch on a name like this. Lots of price action to work through here. This is admittedly a bit of a choppy chart in the short term. Not as much relative strength as I'd like to see. We're starting to see maybe a reversal of that. Industrials have been very strong of late, so hopefully we get a little bit of a tailwind from the industrial sector here for Cintas as it tries to make this breakout. I want to see the relative strength pick up, but I like that we're trading above key moving averages. The short-term 20-day is actually sitting below the intermediate-term 50-day, so I want to see that reverse as well. Want to see a little bit more volume come into this name as well, but definitely one that is threatening to make a breakout, trying to make a breakout, has a little bit more price to work through here, some candles to work through there above where it's currently trading, but kind of bouncing off of its 50-day right now, which is a nice sign for Cintas. I do like to see that. Scooter is up in the 60s. So again, we've kind of reverse sorted this. We're getting better here with the scooter score. I like to see scooter scores more in the 70s, 80s kind of range. Not too extended yet, not up in the 90s, but a little bit stronger. I want to see this thing outperform a few more of its peers. But I like the way that some of these longer term moving averages are trading. If we jump this thing over to a longer term view, we can also see that, again, just like SFM, this is consolidation within a really strong long-term uptrend. We can look at a long-term 5-year chart. Let's look at a long-term 7.5-year chart, just continues to move higher. Let's look at a long-term 15-year chart. That is probably one of the most beautiful trends that you can possibly find out there in the markets. This is long-term trending. Cintas just absolutely a winner over the very, very long term. So maybe for you, this is kind of a buy and hold kind of name. You're trying to catch that breakout. You're trying to get a good entry. You can manage that trade in the short term, but maybe this turns into one of those longer term, kind of sit with it and just let that long-term trend do its thing. Really, really interesting when you flip back to the long-term trend there. One other thing that I wanted to highlight on this too was just that long-term trend. It's such an interesting view between the short term and the long term. Being able to move between those different views, really, really helpful. Again, I would highly encourage you to set up those chart style buttons on the left side of your charts with different time frames that matter to you. I've got short-term time frames in here. I've got long-term time frames in here. I'm constantly moving between those. But time frame gives you more perspective over the names that you're following. It's not just about looking at things over 1 year or 2 years. It's about moving through those time frames and see how traders at different levels are kind of moving this stock around. So anyways, Cintas, definitely one to watch, I think, for the month of August as it tries to make that breakout. Actually, one of the things, this was what I was going to mention. One of the things that I like about this name in the kind of in the shorter term, a bit cup and handly. It's a choppy, kind of ugly cup and handle. But if we move this thing back a little bit, you'll see I actually moved this back to 1.5 years. Starts to look a little bit cup and handly here. So I would say if we can continue to move higher, kind of finish that formation here for Cintas, if we can see that relative strength turn around a little bit, there's a lot to like here on that chart of Cintas as it tries to make that cup and handle breakout. Definitely one to watch for the month of August. Next up, we're moving into the real estate sector. We've got SBRA. Now, a bit of a tough day today, but the candle actually kind of looks worse than the percentage move. So this thing doesn't move around a ton, not a super volatile name, moves in kind of smaller percentages. But what I wanted to highlight on this name, again, kind of similar to Cintas, we're looking for that breakout. We want to see this thing continue to ride those kind of intermediate term trends. I'm looking specifically at that 50-day as it kind of cuts through the noise of those choppy price bars. If we look at that 50-day, we can see that this thing has been pretty steadily moving higher. Right now, we're kind of back down to test it. I want to see us hold that 50-day, continue to move higher, hopefully make the turn, make that breakout. Again, want to see relative strength pick up, kind of a very, very similar formation here to Cintas with SBRA. I do like volume picking up a little bit. Could be better there. But again, I like the RSI holding generally above 50, dipping a little bit below, but RSI kind of generally staying in a pretty bullish range. Not too bad, and the scooter score starting to make its way out of the 50s up into the 60s. Want to see that get a little bit stronger. The thing I wanted to highlight though on this chart, it's a really, really interesting example of a sample chart that we have down on the Sharp Charts workbench. Again, I mentioned the 50-day. I mentioned that I'm kind of following that 50-day even through the noise of those price bars. I'm also keeping a close eye on that 200-day, long-term trend also moving higher. It becomes a little bit hard to see on this chart when you have such choppy price action with such big candles kind of cutting through those moving averages. So one chart that we've actually created for you that I love to use for exactly this purpose. If you come down to the Sharp Charts workbench, you hit the chart style library, and over here under the select library menu, look for popular chart styles. Now we've got a whole bunch of different sample charts in here. Of course, you can browse all of these other groups that we've also created, but under popular chart styles, there is a sample chart called the moving average focus. If you give that a click, we'll make this bigger so that we can see it. And we'll also make this, let's kind of keep it focused on a 1-year chart here. So what this chart is going to do, it's actually going to fade out the price bars, and it's going to keep those moving averages kind of at full color. So we call it the moving average focus chart because it makes it a lot easier to focus on these moving averages. Now, when you look at SBRA through this lens, it becomes incredibly clear, wow, that intermediate term 50-day is really cruising higher. It's actually staying above the 200-day, and the long-term 200-day moving average also continuing to move higher. You can also see sort of faded out there in orange. That's the 100-day moving average, so kind of split between them. You can see that is also moving higher. But this moving average focus chart, I love to show people this as a way to kind of filter out some of the noise of the daily price movements. It's funny, people have this reaction, hide the price bars. I would never hide the price bars. Well, you can still see them there. They're faded out. You can still see how they're moving around those key moving averages. You can still see where the latest price is. But this ability to kind of focus yourself on the direction of those moving averages, I find that this makes this really, really easy to see. And so for a name like SBRA, where you have these moving averages just clearly trending higher, you have this kind of interesting view of this name. So SBRA, one that I'm definitely watching for the month of August, kind of on breakout watch again there, but wanted to highlight this moving average chart. I think it's a really, really interesting way to see this name in particular. Try using it with some of the other names that you're following. Try using it for the market as well. Something like the S&P 500. If you're getting lost in the movements of the index, the major index, pull up that moving average focus chart. It's a beautiful way to keep yourself focused on kind of what's happening over a longer term time frame. So again, coming back to time frames. Anyways, we're going to move on to our fifth name of the day. That is going to be Synchrony Financial, SYF. So we're jumping over to the financial industry. Couple things that I love about this chart. Again, a classic kind of breakout formation, but in this case, we've got a lot better relative strength. So we can see that relative strength line has been trending higher, generally off of the April lows. This has been heavily outperforming the market for the last couple of months. I love to see that relative strength coming out of SYF. I also love to see the shakeout up here near the breakout level. So we've had that sell-off. We've rallied all the way back. Our moving averages are almost in the right order. We've got the 100-day still trending there below the 200-day. But the 20 is above the 50 and the 50 is above the 200. Our primary moving averages are in the right order. And what we've seen is quite a shakeout here right around the breakout level. I love to see that dynamic. If we can see a shakeout at the breakout and then we move higher, that is the setup that I love to find. We get sort of, we shake the tree, right? We see what sellers are going to fall out of that, and then we can move higher with sort of a better footing, if you will. So I'm definitely watching the breakout here on SYF, but specifically, I've been watching this one actually for a couple of weeks, and to see us chop around right up here into the breakout level, to see us test the 20-day a couple of times, to see us lose it and then rally back and now trade above it. A lot of price and moving average dynamics that I like on this chart. Definitely one that has caught my eye. I like to see the shakeout in RSI too. So our classic momentum metric has had this kind of move lower, but has found a bottom there above the 40 and is back now above the 50 level. So we're back in kind of bullish territory for the RSI, bullish momentum territory there. I like to see the accumulation distribution moving higher here. So accumulation is with you, money flow is with you. And that scooter score is continuing to move higher. So again, we've had a little bit of a shakeout, but moving higher, we're getting really, really close to that 70 level that I mentioned earlier, which is kind of a key level for me as a user of the scooter. I really, really like the last couple of days on this thing. So we've put in those lows, we've rallied back pretty aggressively, and now we're kind of above that breakout level, kind of right in that range that I'm keeping a close eye on. Lots of really interesting things to watch here on SYF. I think this is definitely deserving of a breakout watch. The interesting thing to note here as well, speaking of breakouts, is that we're breaking out not just on price itself, but also threatening to break out on price relative. So we're trying to break out relative to the markets in addition to breaking out on price itself. That's kind of a double breakout that I like to follow. So you've got good relative strength dynamics, you've got a breakout of relative strength, you've got good price dynamics and price breaking out itself as well. Another great reminder of drawing those horizontal lines. This becomes really, really easy to manage risk on a name like this. You've got a pretty defined range here, especially with the shakeout that we saw a couple of sessions ago. That gives you some really, really interesting dynamics to play with. That was almost a test of the 50-day, which is another thing that I really, really like about this chart. So lots of interesting price dynamics to watch on this name. But SYF, definitely one that I'm watching there from the financial sector in the month of August. Let's move on to AutoZone. Now, this one's going to be a little bit different from me. We're kind of going back to that concept of the longer-term trend. So this has been consolidating a little bit over the last couple of months. I do like to see that consolidation. Relative strength now starting to pick up. We've moved higher really, really nicely over the last couple of sessions. So in the very short term, I would say that this is a little bit extended. I'd like it to come back in, test that breakout level from the top this time. So test that green level or somewhere around there from the top. But I like that our moving averages are all in the right order. I like that our moving averages are moving higher. I also like that RSI, momentum on this name is just a thing of beauty. We're not overbought, but we're staying above that 50. I like to see the RSI moving higher on this. Money flow is with you, both the accumulation distribution and the on-balance volume, which I like to track, both of those moving higher. And the scooter is nice and right in that 70s, kind of high 70s. That's that zone that I really like to find. Again, not overbought, not too stretched, but it's not a weak scooter score. So the scooter score there in the high 70s, kind of mid to high 70s, really, really nice value there for AutoZone. Again, I would say that this is a little bit stretched in the short term, but I mentioned the long-term trend, and this is where AutoZone really catches my eye. This is a name that just has come onto my radar again and again and again over the years. When you look at this name in the short term, you could say it's a little bit extended, but when you look at this over the long term, this is going to look a lot like that Cintas chart that we looked at earlier. This long-term trend that you want to participate in. This could be, a good opportunity to catch some consolidation and catch a good entry there on AutoZone if that name can kind of come back into that range a little bit. But over the long term, here's a 5-year chart of AutoZone. Just an absolute flyer. This thing has been a steady trender over the last 5 years. If we jump all the way out to the last 15 years, again, just like that Cintas chart, we can see this thing has just been a very, very, very steady trender. So one to watch, has some interesting dynamics for right now for the month of August. I think there's some interesting entry points that you could try to watch for there on AutoZone. But again, could be one that makes sense over the long term as well. If you want to just let this long-term trend continue to work for you, AutoZone could be one to watch. Has been a nice outperformer, heavily outperformed the market over the long term. Just continues to move higher, and it's backed by some group strength as well. Some of these other specialty retailers, some of these other auto parts names in particular, like O'Reilly, have done a very, very similar thing. Just very, very steady trenders over the long term. So if you can catch an entry on one of those long-term trends, could be a nice opportunity to sit in there, let that trend work, let that thing ride. So AutoZone right now, I think some interesting consolidation to play with, but definitely one that I'm watching more as a long-term trender. We'll see where this thing goes in the month of August. Next up, we're going to jump over to Franco-Nevada, FNV. So we're looking at a gold mining name. Now, gold mining, actually one of the strongest industry groups out there in the market right now. The last time I checked, could have flipped, you never know, but when I checked this morning, gold mining was the strongest industry group on our industry group scooter list. So of the Dow industry groups, there's about 104 of them. Gold mining actually the strongest industry group right now. Obviously, gold versus stocks has been a really, really interesting conversation this year. Gold has really, really been working. Gold mining names have also really been working. So Franco-Nevada, one that has a really, really interesting setup right now. Looks kind of similar to that AutoZone chart in some sense in the short term. Kind of consolidating here over a shorter term last couple of months. A little bit stretched, I would say, in the very, very short term. The last couple sessions, last 3 sessions, have definitely moved this thing quite a lot higher. So we've moved up by about 7.5% over just the last 3 sessions. So definitely a little bit extended, I would say. But you've got some interesting consolidation range kind of dynamics to work through here. So I've drawn those green lines where you can see them, kind of based on how we've been trading through that range. If you want to be a little bit more conservative with a name like this, I think you watch the top of the range, watch some of those kind of all-time highs there for FNV. Or, maybe it consolidates back a little bit. Maybe it comes back to test the 50 and you sort of play the middle of that range. If we annotate this really quickly, we can draw 2 lines here. I would say the top of the range is probably, I'd probably put it right there. You could draw it a little bit higher, but let's say it's there. I'm going to duplicate that trend line, and I would say the bottom of the range is pretty clearly right here. So there's kind of your consolidation range for FNV. You could play the middle of it, you could play the bottom, you could be a little more conservative and play the top of this, but definitely consolidating and has that group strength. So I want to see this thing continue to move its way higher. I'd love to see it kind of settle down just a little bit, maybe one more test of the 50-day, but the relative strength on this continues to turn around. I like to see that relative strength line starting to move higher. Volume could be better, especially when you see big moves like this. I want to see more volume coming in on a big move like that. It scares me a little bit that this is actually below average volume on such huge moves to the upside. So definitely, again, looking for a little bit more consolidation here in FNV. But the scooter has been a thing of beauty. So 84 there on the scooter, that is a really, really nice scooter number. That Stockcharts technical rank, just a really, really nice number that kind of typically leads to more strength. If you can see something come into the 80s with a nice setup behind it, we typically see that scooter score move higher from there. So definitely one that I am watching. Clear consolidation range within that uptrend. This is the type of thing that I like to find. Find something that's moving higher, it's taken a bit of a breather, and then it's going to continue to move higher if we can make that breakout and sustain that longer term uptrend. I think FNV, especially with the group strength behind it, with gold mining being such a strong industry group, FNV definitely has a lot of those dynamics going for it. So definitely one that I am watching closely for the month of August. Number 8 is going to be Constellation Energy, CEG. Now, utilities, kind of another space that is doing some interesting stuff right now. We've got all of this talk about utilities benefiting from AI, utilities benefiting from crypto, just with more energy usage and all of that. So we're seeing some interesting shifting dynamics. Things like Oklo absolutely flying, and they're technically within the utility sector, but they're trading like the most insane growth stocks you can imagine. So some interesting dynamics happening in utilities right now. CEG, though, is definitely one that catches my eye. Now, you got to be careful. This is one thing I would definitely encourage you to turn on for your charts. Make sure that you have the full quote turned on. So down here on the Sharp Charts workbench, under the chart settings area, make sure that you have the full quote checked. That's this little checkbox right here. What that's going to do is turn on this additional info panel right up at the top. Gives you a lot more information, things like market cap, dividend yield, scooter score, all right in that little bar. But one of the most important ones here that I love to reference, especially for individual stocks, last earnings and next earnings. Very, very crucial to be aware of. So in the case of Constellation Energy, we can see that we are bumping up against earnings. Our next earnings date is going to be on the 7th. So coming up very, very soon. Definitely something you got to be watching for here on CEG. But maybe one that goes under your radar. You watch, see how it trades around earnings. See how it does after. Maybe settles down a little bit. Give it a couple of days. But definitely on breakout watch for me. This is another chart that has caught my eye out of the utility sector. Relative strength is really, really lovely. We're seeing great relative strength out of this name, and kind of similar to one of the names that we talked about earlier, starting to make a breakout on relative strength, on price relative. So really interesting dynamics there. Price itself trying to break out. So we've seen kind of a bit of you could call it a very steep ascending triangle, but we're pushing up towards that breakout level. We're chopping around it a little bit, but we're doing so above key moving averages, which are all in the right order and all moving higher. The 20, the 50, the 100, and the 200, the moving averages that I like to follow, so many other technicians as well. Those are all moving higher. They're all in the right order. We're seeing a beautiful sort of intermediate term and long term and short term trend here on CEG. It's been a bit of a choppy year, but again, making that breakout, drawing those horizontal lines makes it really easy to draw your lines in the sand and follow this name with sort of proper risk management techniques. I would say the RSI has gotten close to overbought, but I do like to see that staying clearly in bullish territory. Accumulation distribution, not as strong as I would like to see, not the best money flow on this name, so that's kind of one weak point for me. The scooter score taking a little bit of a breather, but again, staying up there in the 80s, that is a very strong stock. Relative to all of the other large cap names out there, relative to other large cap names in the market, CEG has been absolutely a very strong name. Definitely one that I am following. Anything else that catches my eye about this? Long-term trend is strong. Really strong. So we're seeing CEG heavily outperform the market over the long term. Again, trading up near all-time highs. So that breakout that we are watching for is a breakout to all-time highs too. No overhead supply with this name, which is a thing that I like. Another reason that the sort of multi-time frame analysis is so crucial for me, being able to quickly zoom out and see what the longer-term trend is on any of these names. Makes it easy to see, are we starting to turn off a bottom, but we got tons and tons of price dynamics to work through above us. In this case, you can see that we're actually threatening to make that breakout to all-time highs. So a lot to love on CEG. I think this is a fantastic chart, other than the fact that we got earnings coming up so soon. So definitely one to watch for this month. We'll see how this thing does after it reports, but definitely one that's made its way onto my watch list for this month. Next up, we've got DoorDash. Now, I'm going to be honest with you. This is a breakout that I've been kind of kicking myself over. We're going to start actually by zooming out a little bit. Let's look at a longer term chart. We'll do the last 5 years here. This is a breakout that I was hoping to catch earlier in the year. Just the way that sort of my book was working out. Didn't catch it, but starting to kind of make its way out of an IPO base, I would say. Really interesting formation when you look at the longer term trend. So over the long term, right, since going public, has almost gone nowhere. DoorDash has really almost gone nowhere, and since going public has actually underperformed the market. Over the shorter term, though, the last couple of years has absolutely been a flyer. Since the lows in 2022 and 2023, DoorDash has been up 450%. So huge move off of those lows. This is why breakouts are so interesting. Is this a stock that's up 450%, or is this a stock that's gone absolutely nowhere since becoming a public company? We can see the long-term, over the last couple of years, the long-term relative strength has been actually very, very, very strong. DoorDash has been heavily outperforming the market off of those lows. So in 23, 24, and now through 25, a really, really steady trender off of those lows. Really interesting name when you think about kind of the IPO base, coming out of that IPO base, how this thing has been moving when you look over the longer term. Now, in the short term on this name, just steadily trending, holding key moving averages, all of those moving averages all in the right order. We can see the relative strength has been incredibly strong. Earnings, another issue that we've got to be aware of here for this name. So earnings on the 6th. So that is definitely something to watch on DoorDash here. But a steady trender that is just starting to come out of its IPO base. So trending on the daily and breaking out on the weekly. When you combine those different time frames, DoorDash is a really, really interesting one. I'm definitely watching this earnings report very, very closely tomorrow. That is going to be one that I watch very, very closely. We'll see how that goes. I think this is the type of name, given sort of a more growthy name, that kind of thing. This is the type of name that's probably going to move really big on earnings. So we'll see what the reaction is. We'll see what the report is. But definitely a name that I am following closely for the month of August. Now, I do think that we're going to sell off a little bit. I think we're going to see this market cool off. So depending on how that report goes, maybe DoorDash comes lower, gives you a little bit more consolidation. Maybe it's consolidation around that IPO base breakout. Who knows? We're keeping a close eye on this one for the month of August. But definitely, over the short term, a really, really interesting, steady trender on the daily, and again, breaking out on that weekly term basis, on that kind of IPO base that I'm watching for. So a really, really interesting one to watch for the month of August. Finally, kind of a similar conversation, I'm watching Affirm. This is our technology name. DoorDash was our consumer discretionary. Affirm is going to be our technology name. We're ending on tech. We got to have a technology name in there. Affirm is going to be the one that I am watching. So really, really nice relative strength coming out of this. Earnings towards the end of the month, so you got a little bit more room. I want to see this thing continue to move higher, though. We've got a little bit more price action to work through above this thing here. But again, I want to flip back to that kind of longer term view. So when we think about this from multiple time frames, right? In the short term, on that daily chart, this thing is starting to break out, relative strength. We got a lot of great things going for it. Over the longer term view, though, this is a stock that is kind of just trying to make its way up and out of its IPO base. Still has quite a lot of overhead supply, I would say, to work through. But we're starting to come kind of out of that first phase of the IPO base, I would say. So consolidating a little bit over the last few years since going public. We've still got quite a lot of price action to work through. But if you want to be kind of take a risk-on approach to this thing, if we can make that breakout on the daily, and if we can trade even just back up to all-time highs on this thing, you're still looking at a huge move. You're still looking at a 100+% move here on Affirm. So overhead supply is going to be the thing that you got to be aware of with this name in the longer term. But again, on the daily, this thing just absolutely caught my eye. This is a beautiful, beautiful chart on the daily. Really, really nice breakout that it's trying to make here. Moving averages generally in the right order. I like to see the 20, the 50, and the 200 all moving higher. I love to see RSI holding above 50, staying in that kind of bullish zone there on the RSI. Money flow, absolutely beautiful. Accumulation, distribution, and on-balance volume moving higher. And this is our strongest scooter score of the group. So a 92. This is a very, very strong stock there. Lots to like here on Affirm. I love the relative strength. Love to see that continuing to move higher. So definitely one that I'm following very closely for the month of August. So guys, that is going to do it for us. We flew through lots of charts, lots of data. We touched on what's going on in the markets with the S&P 500. We looked at the market summary dashboard, gave you a couple things to keep a close eye on this month for the market as a whole, but also gave you 10 really interesting charts to watch from 10 different sectors. That was a kind of a fun way to do this month. A little bit different for us here doing the top 10 charts to watch special. Now we're going to be back next month. Of course, we're going to have Dave Keller back in the studio as well. So it's always fun to kind of bounce back and forth with Dave picking different names. But plenty to watch for the month of August. It's a really, really interesting time. Keep an eye on those seasonality charts as well. Seasonally, historically, August and September, a little bit weaker for the market. So especially considering how far we've run, kind of where this bull run has taken us, I think a little bit of consolidation, a little bit of selling, a little bit of digesting here for the market in the month of August and September. Not something to be concerned about, but definitely something to keep an eye on. So lots to watch. It's been a crazy, crazy year, and it's only going to be only going to be more of a wild ride ahead, I am sure. But we're going to be covering it all here on Stockcharts TV. So as always, thanks so much for tuning into Stockcharts TV with me. Again, my name is Grayson Roze, Chief Strategist here at Stockcharts.com. Remember, give this video a thumbs up if you had fun with me. Leave a comment down below. Let me know what you are keeping a close eye on for the month of August. And of course, subscribe to the channel for more great content. We always got something happening here on Stockcharts TV. We'll see you again very soon for the next one. But of course, until then, keep calm and chart on, my friends.